Good morning, folks. This is Naeem Aslam, Chief Market Analyst at Trade, and welcome to our daily technical analysis video. Now, in today's market segment, or in the commodity segment, what I really kind of wanted to touch base on is on crude oil, because the prices popped yesterday, both for Brent and crude, and we'll have a look at that and have a discussion around some potential support and resistance levels ahead of the inventory data, which we are going to see today as well. But before we do that, as always, it is important for us to go through this slide of disclaimers and risk warnings. So anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, we are going to look at the MT4 platform, as I am sure that most of you know how to trade by using the MT4 platform, and it is one of the most basic platforms out there. Now, with respect to crude oil, what we are looking at, I will be flipping between MT4 platform and Bloomberg Professional. Bloomberg Professional, as it says, it is for a professional traders. It has a very hefty fee behind that. But what I will do is I will share some of the insights there from the Bloomberg Professional platform, so which can really help you to form a better opinion with respect to crude oil and how to really trade that crude oil today. So why don't we actually start by doing that and have a look at how the price performance has been for that. So what we have over here is we are going to look at the prices for crude and prices for Brent. So what over in here, what you can see is this is the price for crude oil, right? So let me just readjust, bring this chart a little bit over here and then show you what exactly I mean by that. Now, as you can see, crude oil, which is the ticker CL1, don't forget about the ticker or anything else. All what we wanted to focus over here is that crude oil is up by 2% today, and Brent is up by 1.80%. So when we look at that, we can see the Brent prices have crossed above that critical level of 40. This is the 3-day chart, and the time frame is 3 minutes. And this is your daily chart. As you can see that the price has broken out of this ugly pattern, this ugly sideways pattern. This is the area that I am really referring to. So let me just make that area a little bit more clear for you guys. So this is the area, the ugly area of consolidation that I'm really talking about. And the price, as of today, it has broken out of this zone, so which indicates to me that yes, okay, this bull trend is about to go from here. Now, it's the same element. There is a pretty much same argument for a crude oil as well. As you can see, the price is over here, and the price for this one is also about to break out of it has broken out of this sideways consolidation pattern, and it is breaking to the upside, breaking above that, but still below that critical level of 40, because in order for this bull trend to continue, we really want the price to break above that critical level of 40. And when I look at the major headlines with respect to crude oil, you know, we don't really have anything which says that, yeah, okay, you know, like the first one, it says the oil extend gains with weaker dollar. Okay, so that is to saying that the gains are pretty much driven by the weaker dollar. Then what else is there? Crude oil prices advance as hurricane threatens production. So there is some element of that hurricane, you know, again, that another hurricane perhaps that could increase that oil, that could decrease the production and increase the oil prices. So that is the second important fundamental with respect to that. Then the third major headline that we're seeing over here is OPEC sees preliminary August cut compliance at 101%. So meaning that OPEC, the recent production cut which the OPEC really introduced in order to control the supply, so that compliance is very going very well. In fact, the compliance is a little bit over 1%, over 100%, meaning that they have produced even less supply than what the anticipation was. So all of this from a fundamental perspective, from the news perspective, what we have seen so far is pretty much good. And again, another headline from Bloomberg is the compliance remains solid, again confirming the same narrative that we have discussed. So now let's move on to MT4 platform and then look at the price action from that perspective. Now, given the fact that we have formed an opinion which says that, yeah, okay, things are looking good from the fundamental perspective. But one last thing that I kind of wanted to touch base on that is I wanted to bring out this particular calendar, which is quite an important one, because at 15:30 today, a UK time, we are going to get the crude inventory data, and it is at that time that we are going to get a lot of volatility for crude oil. So I would expect, not to try. I mean, I don't really like to have any position before this because it is highly unpredictable. So you can't really predict what the numbers are going to be. But what we are expecting is we're expecting a drawdown from a previous number of 2 million going down all the way to 1.27 million. But again, as I said, it is difficult to really have a clear indication on that. So that is why I don't want it to. I don't like to have a position ahead of that. I wanted to trade once the news is out and then see which way the trend is really moving and then look at the price. Now, in terms of a price levels, which most of you guys are very much interested in, to look at that. So when we look at the price from a daily time frame, what we're really looking at over here is where the price is trading with respect to its moving averages. This is your 200-day moving average shown in green. What do I mean by that 200-day moving average? So it is the average price for crude oil for the last 200 days. So that average price, as you can see over here, this is where the prices will show, is trading near 36. And this orange one, it is the 100-day simple moving average, which is trading at 38, and 50 is trading at 41.28. Now, clearly, the price on a daily time frame has moved above the 100-day moving average, which shows, and it stayed above the 100-day moving average, which shows that yes, bulls didn't really lose full control of the price. They always had some sort of a control with respect to the price, but at the same time, we are nowhere close to be out of the woods. What do I mean by that? Because the price is still trading below the 100-day moving average. And this is where potentially we could see a contrary trade, a trade which could be in the opposite direction. This is where the initial resistance zone is, so which could be between 39.57 to 39.93, as you can see. But the more important resistance level could be near that $40 mark, or just slightly above that $40 mark. But again, if the price clears its 100-day moving average right over here, then it is and stays above that. If it moves above this and then it stays above that, then really what we are looking at with that respective is that the price is going to continue its journey to the upside. So if we see a break to the upside, then the price is really going to move towards its next level, which is your 50-day moving average, and that is what I'm really looking at in terms of prices from here. But right now, as you can see, the price is very much trading to the upside, so that is okay for me because the trend is to the upside for the time being, and that is what really I am looking at. But the opportunity comes right over here where that important that resistance level is, which is right over here, right. So if the price it cannot break above this 100-day moving average, then that is where you wanted to place the trade. So what is the trade and how can you possibly put that trade in? Then in order to do that, what we're going to do is we're going to go back to our 4-hour time frame. So in order to do that, all what you got to do is just click your 4-hour time frame from here. So what we do for that is, I see that how that 100-day moving average is trading around on the 4-hour time frame is 40.35. So again, I think this is a better resistance level from that perspective. But right now the price is going to continue to move. So from a trading perspective, look, if you are trading from a daily time frame, then you wanted to put your stop losses just above that 100-day moving average and then wait for the price, how the price reacts. But if the price breaks above the 100-day moving average and it stays above that, put your stop losses below that 100-day moving average. But keep in mind the levels on your 4-hour time frame, which means if you are buying the price above this one, the next resistance, perhaps where the price is going to see some sort of resistance, is going to be 100-day moving average on a 4-hour time frame. But that doesn't mean that this moving average is going to push the price lower, because the time frame which has more importance, it is your daily time frame. So if the price stays above that 100-day moving average on a daily time frame, it is going to remain to the upside. It is likely to remain to the upside. Now, in terms of our RSI, what we can see is that the RSI has started to trend to the upside. So as long as the RSI doesn't fall below this upward trend line, I think we are okay. Remember, all of the analysis, all the discussion that we have done is primarily based on a daily time frame, and it is not your intraday. It is slightly bit more passive, meaning it is a bigger time frame, and then the beauty about the bigger time frame is that you are less likely to be stopped out as compared to a smaller time frame. But as always, if you'd like to know more, if you'd like me to do something more special, do tell me, comment here, and then I'll be more than happy to cover that. That's all for today. See you guys next time.